crypto looks to continue be on a little bit of a shaky ground, but Bitcoin continues to fight and hold at around the $20,000 level. It dipped around 17,000 over the weekend, which I mean I saw that and I was like, yeah, I'm gonna put in $20 to this and see what happens. Because and again, it quickly rebounded to 21K where we're sitting right now. Are there any updates in the crypto space?
Yeah, sure. We think that $20,000 is a critical level that will ultimately hold for Bitcoin. There's a plethora of data and charts out there. Basically, I think we talked about this last week as well. All of the on-chain data largely and strongly implies that $20,000 is a level at which Bitcoin should play strong defense. And it's a level at which, historically speaking, previous bear markets have bottomed. Not at $20,000, but in terms of realized price, in terms of the NVT ratio, in terms of the price spent from long-term holders to short-term holders ratio. These are all kind of on-chain data metrics we're looking at. Based on those datas, there are points consistent with previous bear market bottoms. So that would strongly imply that $20,000 is a level at which we play really good defense on Bitcoin. That doesn't mean that we all of a sudden take a V-shaped recovery and go to the moon now. But what it does mean is that we probably enter a period of consolidation, of healthy consolidation, which allows us to form a basis for the next bull market, which probably occurs within 12 months of the 2024 halving. So you have a halving in early 2024. That means the next bull market probably starts Q1, Q2 2023. And this is very consistent with the historical pattern of Bitcoin. You get a boom starting 12 months before a halving. You get an accelerated boom into the halving. After the halving, you start to come down as that wears off. Then you start to consolidate. Then the next halving starts to come on the horizon. About 12 months before that, you start to boom again. And then you do that whole cycle all over again, lather, rinse, repeat. So I don't think this time is different for Bitcoin. I think we're going to continue to follow that pattern, meaning we consolidate here over the next 6 to 7 months, followed by a slight breakout into the halving, which is accelerating into a new bull market once the halving comes in 24. And so I think that's how Bitcoin progresses over the next several years. However, there is the risk, which is a very real risk, which is causing us to not be as bullish as we would be otherwise, that this time is different. And this time could be different because Bitcoin hasn't been through a recession, a real recession. It was through 2020. But, you know, when we talk about the previous bull bear markets, the boom bust phases, we're talking 2015, we're talking 2018. The economy was on solid footing during those times. You know, we weren't going into a recession. We didn't have runaway inflation. We didn't have a Fed that was hiking rates super aggressively by 50 basis points, 75 basis points a meeting. We didn't have oil prices surging to 120, 130. So we are in a different world than we were in 2012, 2015, 2018, which would add credibility to the thesis that this time is different for Bitcoin. And in that scenario, we do think Bitcoin could collapse at $10,000. So that's why we're not like pounding on the table, foaming at the mouth bullish right now. We're bullish. We think that this is a bottom. We think that we consolidate before we go higher. But there is a, call it 15 to 20% chance we take a leg lower to 10. That's why we are preaching consolidation among the majors. We're preaching consolidation on really high quality projects, and we don't think it's time to go out there and start taking a lot of shots. Just wait. Patience is your best friend in crypto investing right now. Why are you invested in cryptos? Because you think they're going to change the world over the next 10, 20 years. These are long-term investments, folks. There's no need to get short-term greedy on long-term investments. Stay patient. Wait for signs that we're stabilizing, that we're consolidating, that a turnaround might be here, then start taking some shots. But right now, whatever you own, consolidate around that, stay stable, stay in that ship, and then once things start to get better, open up the doors and start taking more shots. But don't get overly greedy here. If you miss the bottom, oh well, we'll catch it 5%, 10% on the way up. That's fine.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's hypergrowth insights.